A very good evening and a warm welcome to the Business Roundup on another weekend. We Are Television bring you as usual another collection of latest happenings and developments in the business arena, easing your decision-making moments. I'm Ashingsani Veerasinghe. Let's have a look at the headlines for today. Cabinet extends loan facility provided to tourism sector affected by COVID-19. World Bank warns on Sri Lanka's GDP rate and indicates a possible U-shaped recovery. EDB shares expertise on recovering the economy. News in detail. The Cabinet of Ministers has renewed a relief package provided to the tourism sector, which was adversely affected by the COVID-19 pandemic. This was announced by the co-cabinet spokesperson, Minister Dr. Bandula Gunawardena, at the weekly cabinet decision press briefing held at the Department of Government Information last Thursday.
Accordingly, the cabinet nod was given to provide loan facilities on the basis of paying back within a period of 5 years along with a 2-year concessionary period under an interest of 4% in order to pay the salaries of 20,000 rupees per head of the staffs of tourist hotels and tour management companies registered under the Sri Lanka Tourism Development Authority for a period of 6 months. Moreover, it was agreed to provide similar loan facilities for the payment of salaries up to 15,000 rupees each for a period of 6 months to the employees of restaurants, cafeterias, massage centers and physical health centers registered under the Tourism Development Authority. Also, the registered tour guides will be provided 20,000 rupees and tourist drivers will be given 15,000 rupees as one-time allowance. Moreover, the concessionary period of 6 months given for payment of leasing installments related to tourism sector is extended up to 12 months without any delayed charges. Furthermore, the registered tourist hotels and restaurants are provided with the facility to pay the electricity and water bills payable from 1st of March this year to 31st of August this year in 12 installments after 1st of September and to enjoy the facilities without any disturbance during the given period without any power or water cuts.
An agreement was signed by the Government of Sri Lanka with the Government of Germany to obtain a technical assistance grant of 11 million euros to implement projects related to vocational training and SME development.
Accordingly, the signing of the agreement pertaining to the grant took place at the Ministry of Finance, Economy and Policy Development and Secretary to Ministry of Finance, Economy and Policy Development, SR Articular, signed the agreement on behalf of the Government of Sri Lanka, while the Ambassador for Germany in Sri Lanka, John Rode, signed on behalf of the Government of Germany. Thus, 7 million euros have been allocated to provide demand-oriented cooperative vocational training for young people. Thereby, 3.5 million euros will be provided at removing major obstacles to the global competitiveness of Sri Lankan small and medium-sized enterprises. Moreover, 0.5 million euros fund is utilized to finance preparation of new projects, to fund small-scale projects and for financing German experts. The above projects will be implemented by GIS Development Agency of the German government.
The World Bank report predicts that Sri Lanka's GDP would contract by 3.2% this year and it will remain flat at 0% next year. The World Bank, in its June 2020 flagship report titled Global Economic Prospects, stresses that the COVID-19 pandemic has sharply weakened consumption and manufacturing activity and has damaged the tourism and other services industries across the South Asia region. The report shows that it includes sharp declines in tourist arrivals in economies like Bhutan, Nepal, Sri Lanka and Maldives. This includes a decline in arrivals from China, a key market since early this year. The report also notes that in Sri Lanka, the combination of falling tourism, manufacturing activity and services associated with the pandemic is envisaged to cause output to contract by 3.2% despite the earlier recovery from the April 2019 terrorist attacks. The World Bank also cautioned that government debt refinancing needs in South Asia can be vulnerable to a deeper reversal of global capital flows and higher global financial market uncertainty. A further pullback in capital flows would likely reduce investment activity and private sector credit growth, the report added. Stay tuned for more news after this short break. Welcome back after the break. Central Bank Governor Professor W.D. Lakshman assures that the CBSL will use all available tools to maintain financial system stability. Making a special statement, CBSL chief said Sri Lanka's financial system remains resilient and insisted license cancellations of finance companies were done to protect the interests of depositors and should not be construed as sector-wide instability. Releasing a special statement, Central Bank Governor Professor W.D. Lakshman said cancellation of the finance company license had allowed the monetary institution to resolve long-standing legacy issues and provide 93% of depositors with their payments in full. The statement highlighted that similar steps had been taken earlier with regard to Central Investments and Finance PLC and the Standard Credit Finance Limited as well, and 95% of payments had already been settled. The central bank chief also said that the compensation payments to TKS finance depositors had been limited to 26% due to judicial proceedings, but the central bank expects to settle all dues eventually. He also added that implementing corrective regulatory actions in respect of a few institutions does not mean that the entire non-bank financial institutions sector is in trouble. Therefore, he urged the general public not to be distracted or misled by baseless comments and malicious speculations expressing doubt about the health of our non-bank financial institutions sector as a whole. The statement also said the banking sector remains strong with total capital adequacy ratio above 16%, net stable funding ratio above 130%, liquidity coverage ratio above 175%, and statutory liquid asset ratio above 32%. The statement also adds that the central bank is confident that despite the temporary setback caused by the COVID-19 pandemic, the Sri Lankan economy and the financial sector continue to remain dynamic and resilient. It also forecast that conditions would become stronger in the period ahead as the economy recovers. Stressing that the contribution from the agriculture sector to exports in last year was 24%, Director of Export Agriculture at Sri Lanka Export Development Board, Malani Baddegamage, explains how agriculture sector can assist to economic revival process in Sri Lanka. Director of Export Agriculture at EDB, Malani Baddegamage, made these observations, speaking exclusively to Art Television.
Contribution from the agriculture sector to the exports is around 24% last year. So with the COVID situation, we had to continue our exports going. We had a challenge to face. Agriculture sector can contribute in two ways for the economic revival of the country. One is to reduce the trade deficit of the country. So in that way, government is planning to do some import substitution program, because some products are raw material are imported for export processing can be developed in Sri Lanka. So that program is ongoing. And EDB is doing the export diversification program. In that diversification program, we are doing product diversification, market diversification, and also we are discussing, we have already prepared revival plans for each sector in consultation with the exporters and also the advisory committees in the sectors, so and also other institutions. And these sector revival plans to be implemented in short term within this year, some activities, and long term in next year. So likewise, we have prepared some comprehensive plan to take forward this agriculture sector.
In the meantime, Director of Export Services at Sri Lanka Export Development Board, MKSK Maldeni, stresses that EDB aims to promote Sri Lanka as a logistics hub of the world in order to earn foreign exchange.
We are working with the logistics sector in order to earn some foreign exchange into the country. So for the logistics sector, we are trying to do some procedural things in order to get rid of some procedural bottlenecks in the on-report trade sector. So that is also we are doing at the moment. So we are using this period to get these problems which is having for the on-report trade. So we are trying to clear that on-report trade procedure and things like that, and also to promote Sri Lanka as a logistics hub for the world, so that we can earn foreign exchange.
We will be back after a short break. Welcome back after the break. International Finance Corporation, a member of the World Bank Group, has announced that it will provide a $50 million loan to Commercial Bank of Ceylon in order to help small and medium businesses in the country to deal with the adverse economic impacts of COVID-19. The funding will be used to expand lending to small and medium-sized enterprises, with over a third dedicated to businesses owned by women.
Accordingly, the financing package is part of the IFC's $8 billion global COVID-19 fast-track financing facility, which aims to help companies stay in business and preserve jobs. This investment comes under the Working Capital Solutions program of the facility, which provides $2 billion in funding to emerging market banks to extend credit to help businesses show up their working capital so firms can pay their bills and workers. The investment, which comes as IFC marks 50 years of work in Sri Lanka, will also help CommBank sustain its operations and support the economic recovery process. Small and medium-sized enterprises make up a large part of Sri Lanka's economy, accounting for 80% of all businesses. However, according to the World Bank's South Asia Economic Focus, growth in the country is estimated to have been 2.6% in 2019, an 18-year low. The COVID-19 pandemic is believed to have further weakened growth at the outset of 2020, with the loss of jobs and earnings in key economic growth areas in the country.
Sri Lanka Tourism Development Authority decides that a minimum distance of 1.5 meters should always be maintained at the airport by the tourists as well as the staff who handles tourist and airport matters. This was revealed by a new set of tourism operational guidelines issued by Sri Lanka Tourism Development Authority. Tourism Development Authority said the new set of 79 pages long guidelines to be followed when airports resume work were drafted in consultation with the Ministry of Health, World Health Organization and tourism industry stakeholders. A prior booking of the tour package should be done online or via a Tourism Development Authority registered travel agency, and it is mandatory for all tourists to commit a minimum stay of 5 nights in Sri Lanka and book all accommodation only at Tourism Development Authority registered establishments. Further, tourists also have to stay their first night at an accommodation establishment in close proximity to the arrival airport until results of the on-arrival PCR tests are released. According to the new guidelines, the visa-free status and the issuance of on-arrival visas are suspended until further notice. All tourists entering Sri Lanka are required to obtain online tourist visas before arrival, and an online tourist visa fee of $100 will be applicable until further notice. Any airline operating flights to Sri Lanka has been authorized to check tourists for valid visas and negative PCR test reports before allowing them to board the flight. All tourists must be armed with a negative PCR report issued by an accredited laboratory within 72 hours prior to the landing in Sri Lanka. All tourists should undergo a PCR test at the arriving airport and a repeat PCR test to be conducted 5 to 7 days after the arrival, or if the guest develops respiratory symptoms, whichever comes first. Now we have a subject expert at First Capital Holdings bringing you a detailed review on the stock performances for the past week and a stock forecast for the coming week to assist you in decision-making activities.
The market showed a mixed reaction this week as the week started off on a very positive note, but gradually reduced pace as the week progressed. On Wednesday and Thursday, we saw the market being broadly flat after Monday and Tuesday having strong positivity. However, after that, a sharp decline was observed on Friday. Turnover levels remained very strong during the week with over 1 billion rupees turnover throughout the week. Locals were significantly active with all retail, high net worth and institutional investors very active in the market. Most locals were on the buy side while we saw heavy selling pressure by the foreigners. Foreigners continued to be sellers throughout the week with blue chips especially led by the banking sector taking bulk of the brunt. Month to date, net foreign outflow surpassed the 3 billion rupee mark for the month of June, while the year to date foreign outflow surpassed 15 billion rupee mark during this week.
Speaking further, research head of First Capital Holdings, Dimantha Matthew, noted that there will be a positive momentum in the CSC trading in the coming week, especially on the local front with local investors buying onto stocks. However, Dimantha Matthew noted that foreigners will reside on the selling side amidst the fears that an increase in coronavirus cases could cause more economic damage.
In the upcoming week, we think there could be a bit of a positive momentum as we feel that with the upcoming decline in interest rates, there could be further funds from the local front that is likely to get transferred into alternative investments with a special consideration into the equity market. So we see a lot of local investors actually buying into stocks, which is likely to further increase the demand for the equity market. However, foreigners is likely to continue to be on the selling side considering the global threats that are there and on a possible second wave that are there. Most foreign investors are fleeing out of the markets into safe havens. With that, we are seeing a significant outflow from the emerging markets and as such from Sri Lanka as well. So with that, we are likely to have a sizable outflow in the coming week as well. However, we feel that that is likely to be absorbed by the local investors, and we feel the retail activity, which has been high over the past few weeks, is likely to continue in the coming week as well.
And that's all the news for today. Log into our Facebook page to get the latest news and updates. Send us your comments, views and opinions via our email address and hotline. With that, we will be signing out for today. See you again on Monday with State of Business. Until then, take care. Have a good weekend.